back to the macro. We were talking about the sort of need for an insurance policy cut. Do you think that's likely? Is the Fed warming up to that or not?
I think, to me, when I listened to Vice Chair Clarity, I thought his message was we're in patient mode. That signifies we're going to have to see something pretty big in terms of their changing the outlook in order to motivate them to cut. I think it would be great if they were to actually communicate to us about what they're looking for in terms of prompting a cut. And I'm sure there's evidence and data that would prompt them to raise rates as well. And I think they should be communicating more about their contingency planning for the economy than simply saying we're in patient mode. You know, as the data comes in, we'll react. I would like to hear more about what they're looking for.
Do you think the gauge for how the Fed is looking at, assessing, and calibrating for inflation needs to be adjusted?
No, I'm pretty comfortable with how they're measuring inflation. I think it's important to be consistent over time, and I think going to core PC inflation and sticking to that, and then using core as a marker for where you think headline is going to go. I think that's served the Fed well. The bad news is that they haven't done well in terms of hitting their target, but that's not the fault of the measure. That's, I would say, the fault of the policy.
What's your take on this global growth outlook that we were discussing with Sarah there, that Mr. Kocherlakota seemed to be quite relaxed about and about it picking up again soon?
So I'm a little more concerned than he is. I think the good news is for the U.S. remains a relatively closed economy. We certainly have to keep an eye on what's going on overseas, but the basic impulse for U.S. growth remains what happens here in the U.S. And so I think that as a policymaker in the United States, that makes you a little more sanguine about what's happening overseas. But I think there are some risks over there, in both in Europe and in China, and the Fed should be thinking about those as they formulate policies, certainly.
Have you been surprised by the core PCE? You mentioned it. Inflation is really nowhere to be found anywhere. Has that surprised you?
I would say I'm less surprised than some, but I am still surprised. I thought that we could see a very low unemployment rate without seeing much inflation. But boy, I continue to be surprised by how much employment growth we were able to generate without seeing much wage growth, how low unemployment can go without seeing much wage growth. It sounds bad, but that means you can have more growth without generating inflation. So I've been surprised, but it's good news, I think, and it means we can facilitate even more growth without having an inflationary risk.
Your idea of perhaps the Fed should consider using some of its limited ammunition to forestall a recession as opposed to kind of hoarding it until the recession comes. Does it conflict a little bit with people on the committee who believe, look, 2.1%, 2.2% growth in the economy is actually above trend. It's good. It's tightening. The labor market is tightening. I just wonder what the dynamics are in terms of how the Fed would get to that moment of deciding something like that. Yeah,
I think what you would I think what we heard from the vice chair today is you would have to see some kind of slowdown in growth, or significant softening in inflation. If either one of those, I think, would lead them to start to consider a rate cut. What they haven't been articulate enough about also is what they would have to see to prompt a rate increase. Yeah. If you look at the pricing that Vice Chair Kocherlakota wanted us to ignore, there's no pricing of any kind of interest rate increase at all in 2019. That seems pretty extreme to me. I put very low probability on it, but zero seems very low. And I think the Fed should be communicating a little more what they would have to see in the inflationary picture to get them to raise rates.
Narayana, we'll leave it there. Thank you very much. And so